And in international news, China's first quarterly trade deficit in 7 years may ease pressure on the world's biggest exporter to allow faster appreciation of its currency, the yuan. Reason being that China posted a trade deficit of just over $1 billion in the first 3 months of this year. That means China's imports exceeded its exports by $1 billion, helped by stronger domestic demand and higher global commodity prices. At the same time, a year ago, China posted a trade surplus of nearly $14 billion. China's trading partners, including the US, say faster yuan appreciation is needed to help address global economic imbalances. According to currency traders, the recent trade deficit data will now take some heat off the pressure for a faster yuan appreciation. The Indian division of Nomura, a Japanese investment bank, sees India remaining the world's hottest destination for foreign direct investments, despite the recent massive slump in FDI inflows into the country. Foreign direct investments plunged 25% between April 2010 and January this year to $17 billion. The figure was more alarming in January when it nosedived 48% to just over $1 billion. Other emerging markets also saw sharp drops in FDI inflows. Still, India outpaced all of them by so much that Nomura sees FDI inflows reaching the pre-downturn peak as early as next year. Federal Reserve Vice Chairman Janet Yellen said even though the U.S. economy is recovering, this doesn't justify a reduction in the central bank's record monetary stimulus. Economic conditions do not yet call for the Fed to exit from its unconventional monetary policy, Yellen said. This comes after the European Central Bank last week raised interest rates by 25 basis points, the first time the ECB tightened its monetary policy in almost 3 years. Recent US data showed the labor market and inflation have picked up while consumer confidence slipped and new home sales dropped to a record low. Some regional Fed presidents who were skeptical of stimulus have talked about the need to tighten credit, and Chairman Ben Bernanke has yet to indicate his preference for the Fed's next move. Iceland held a referendum today on a plan to repay Britain and the Netherlands $5 billion from a bank crash, a deal that is seen as key to Iceland's swift economic recovery. But the Icelanders voted no, as voters said they don't want their tax funds to cover foreign losses caused by a private bank. Initial results showed 59% of voters rejected the so-called Icesave agreement, while 41% said yes, according to an estimate by broadcaster RUV. The government had hoped an Icesave deal would restore investor and diplomatic relations and end the financial isolation that has stalled Iceland's resurrection from its 2008 banking collapse. The matter will now be settled in the European Free Trade Association's court, which concerns some Icelanders. That's the latest in international business. Before we go, we'll take a quick look at the Asian equity markets from last Friday, then at the price of oil, followed by metals and a selection of currencies.